All right, Ken Orange Theory Trader with you for a week in review for the crypto market. Now, the week technically isn't over just yet, but I wanted to give the breakdown of trades that did appear from Monday through Friday of this week. So I'm going to just pick the few that did work out, or at least the ones that stood out the most to me. Now, of course, crypto is 24/7, so I'm mainly picking the three candle pattern, and like I said, the ones that stood out to me and their time frames. So let's not waste time to get right into it. Now, the broker that I have, the cryptos that make the most sense are going to be the ones that I highlight, and it's these over here on the right. But first, we're going to start with Zcash. Okay, so Zcash USD. So let's go over to this right here. We'll do the replay right there. So the first one that stood out took place on Tuesday, November 18th. This was a 3 7 11 a.m. So remember that we start trading at 11 a.m. Eastern Standard Time for this pattern. We let the first two play out. We mark our opening price right there. Okay, and then we'll drop down to a 5-minute chart to see our possible entries. And we also look for some fair value gaps just to see if there is any momentum in the trade. And if you don't know what I mean when I say some of these things, just be sure to check the link in the description. It'll have the crypto trading information video on that. So, okay, so the best entry actually just would have been right at 11 from the looks of this. So if we would have got in there, and if we put our stop loss below this most recent fair value gap and put our take profit at the candle range high, okay, which was right there. That was around, what is that, $608? Yeah, about there. So let's see here. So, oops, sorry, I put the wrong. I put a sell position instead of buy. I'm like, why is the risk reward negative? So let's do this. Let's do a long position. And then we'll put our stop loss below this most recent fair value gap. Take profit at the candle range high. Obviously, it did go further, but this would have been good for close to a 1 to 4 at the range high. If you anticipated a breakout, then it could have gone up to 1 to 8. So hey, it was a great trade there. So that was that one. So that was again a 3 7 11. So if you just want to trade at 11 a.m. Eastern Standard Time and check the chart every day for crypto trades on that, then you can definitely do that. Let's see. Let me hide these. Okay, so let's go to the second trade that worked out for Zcash this week, which was on Wednesday. This was a 7-11-3 p.m. Eastern Standard Time. All times are Eastern. So obviously we have our range candle and then our manipulation or money candle. Distribution started at 3 p.m. So if you only want to trade at 3 p.m., this will be the pattern that you would look for. Same price action, but different time that it took place. Let me get rid of these just to avoid any confusion. Okay, so we're looking at these three candles. Let me do the replay option. Okay, right there. So we see this is mainly what we're looking for, these large just distribution candles to the upside. So we'll drop down to our 5-minute to see where our best entry would have been. And we'll also check for fair value gaps to see if we have momentum. And we do. So let's see, the 11 o'clock open, I'm sorry, the 3 o'clock opening price was right there. So price never, remember that our best trading zone is below the open price and above the candle range low, which is this black line right here. But if you notice, price never went down there. So really the best trading time would have been between, if you can get in near the open price of the distribution, that would be fine too. So with a long position, let's see here on this swing low, 1, 2, 3. Let's say you get in right here at about 10 after 3 or 3:10. Stop loss below this most recent swing low and take profit, candle range high. That would have been good for 1 to 3, a little over 1 to 3 on that one. Fair value gaps did appear later, but this was the second one on Zcash that did work out. So you could have got 3 times your risk there. And then you were out. God, this was what, 5, 10, 15. In 15 minutes, you would have been out. Well, no, hold on. 5, 10, 15, 20, 20, about 25 minutes. Sorry. But that's the nature of crypto. It can move very quickly, so that's a benefit of trading the market. So there you go. So that was that one. So we'll get rid of all those. And I wouldn't recommend looking for trades 24/7, as I talked about on my crypto market video. I'd recommend sticking to like 1 to 2 time frames, like say times to trade. Say you want to just trade at say maybe like 11 o'clock or at 3 o'clock, in the afternoon, something like that. You look to take the trades in those two windows. Just forget everything else. You don't want to be in front of the chart 24/7. Okay. All right. So this one was a 2337, which means 11 p.m., 3 a.m., and 7 a.m. were the best trading time frames for this one. This is on ADA or Cardano. So let's take a look. So this is the pattern: 1, 2, 3. Distribution candle went down. So we'll mark our open price right there. And we'll do the replay option. Remember, typically you're only holding these trades once you get in. It's going to be 4 hours or less. So we'll do this. And as well, remember that small candles, like this small range candle and small manipulation candle, can lead to larger distribution candles as well. So when you see 2 small candles back to back, get ready for some major fireworks. So with that in mind now, let's go down to our lower time frame to see the best entry. I don't know if there was news here or what, but this was pretty substantial. Now this right here, I promise, this would have freaked out most people, this retrace here. I don't know if this was news or what, but this definitely stopped out a lot of people, this move to the upside. But at the end of the day, if you would have got in at 7, let's see if there's any fair value gaps. There was one. And notice, even with this large spike up, notice how this fair value gap still held. Imagine that. So that's definitely a good sign. So let's see. Best entry would have been, we'll just say right here at about 7:40 a.m. Eastern Standard Time. Let's say we put our stop loss outside of the range. And of course, hindsight's 2020, but at the same time, 1 to 5 is typically my max. But you could have got 1 to 5 on this straight move right there. If you'd put your stop loss above the range high and just went for 5 times your risk, this would have been a fine trade. And you wouldn't have to worry about this price action to the upside with this retrace. So you would have been out by 8:50 a.m. Eastern Standard. And as well, you could have scaled in. You could have scaled in here on that red close. Another entry, say here. And another one like right here. As price just continues to the downside, you could have just scaled in. Matter of fact, I wonder if there were more fair value gaps. Hold on. I bet there were. Before this major spike up is what I mean. So let me do a select bar. Yeah, look at all those gaps. Remember, fair value gaps, we read that as momentum. So yeah, every time a gap appears, you could have just taken another entry. And you probably could have got like 1 to 3 on this final one here. Let me see. To the bottom. Yeah. Even this last one all the way down here was still good for 1 to 3. So yeah, you could have cleaned up on this trade here. So that was a great trade. So that was that. So again, that was a 2337. So if you only want to trade at 7 a.m., that would be your pattern that you could look for. Okay, just a possibility. All right, so that's that. Let's get rid of the drawings. Go to the next one. This is Dogecoin. A lot of people love Doge. So let's see what our best trade was for this one. Or better yet, no, I don't think there were any for Doge. No, there was one. Let me see. Let me exit the replay. There it is. There were 2, but I'm not going to worry about this one. That one was today, but it didn't move too much. So best one on Doge was on Thursday. This was a 3-7-11. This pretty much did the same thing that Cardano did, so I'm not going to go through the whole thing. Let's just say that, of course, it was a major move. So I'll just do the entry and the possible risk to reward. Like I said, 1 to 5 is my max. Sometimes they can go for more. So best entry would have been, was at 11 a.m. I mean, yeah, you could have got in right at 11. Put the stop loss above this fair value gap here. And this definitely went for more than 1 to more. It went for more than 1 to 5. All the way to the perfect bottom, it was like 1 to 6.5. So great trade there. So that's it zoomed out. Let me get rid of these fair value gaps. I do not worry about fair value gaps on a larger time frame. I just don't. I only use it for the 5 minute to look at momentum, so I don't get caught up in all that. Okay, but that was that chart there. Get out of this replay. Okay, XLM didn't give anything. So XMR, which is Moreno. I hope I'm saying that right. I don't know. I'm not Mr. Crypto expert. I'm just not. So, but let's take a look at what we had here. So this was a 3/7/11 a.m. So for anyone who likes to trade 11 a.m., this one is just for you. We'll mark the open price. Do the replay. Okay, and we already have the high and low picked, but I'm just going to remark it real quick. That's candle range high, candle range low. Then we go down to the 5 minute. We'll turn on the fair value gaps and see what we can see. Okay, so best entry would have been around, because what was this at 11? Yeah, at 11. You could have got in at like 11:20 or so. We'll do a short position there. Stop loss can go a little, we'll do it above this fair value gap right there. To the take profit or to the bottom of the range, you would have got anywhere from 1 to 4 if you wanted to go there, or 1 to 5 to the bottom of the range. You're not guaranteed to get price to go to the bottom of the range. However, it did do so in this case. So, and of course, your scale ends. Let's not forget to pyramid. Could have added an entry here. Another entry here on this gap there. Price did retrace to the gap, so possibly maybe you could have added one more on this pullback. And even on this last one here, that would have been good for 1 to 2. Well, almost 1 to 3. So see that. But you can use gaps as a guide to help your scale ends. So obviously you don't want to add down here, but you want to add like maybe middle of the range. But when you get too close to the take profit, you shouldn't still be adding trades, is my point. So that's that. I'll get rid of these. So the last one we'll do is Ethereum. And this one had a 23:37 a.m. So we start trading at 7 a.m. Eastern Standard Time. All these were shorts. The crypto market is really tanking right now. If you've been keeping track with that, you already know. So I'm going to just remark the range high and low and see what we can see. There's the high. There's the high or low. We'll do the replay. Okay, so we mark the opening price. Nice and tight range. This is what we love to see right here. Distribution open. Let me see. This was right at 7 a.m. This one had a lot of gaps as well. Matter of fact, let me go back a little bit and then bring up the fair value gaps. So we should be see a bunch of red ones. There they are. So your best entry would have been, you could have got in right at 7. Short position right here on the candle open at 7 a.m. because you see a fair value gap. You could have got set your take profit slightly above the gap. And then to the bottom of the range, you could have got 1 to 4 risk to reward, which is fine to me. Because you have to remember that you're getting 4 times your risk close to 4 times your risk, at least on your base entry. So if you risk $10, you're going to make 40. If you risked $100, you would have made 400. If you risked $1,000, you would have got 4,000. And you would have entered this trade at 7, and you would have been out by 8. It's 1 hour. So $1,000 in an hour. That sounds good to me. So that was it. Obviously, you got the scale ends. The best time to scale in pretty much would have been right here for another entry off this gap. And if you want to add some more, remember with beauty of candle range theory, you know what price action you're looking for. You're looking for straight drops. But be sure to take profit once it hits the first time. Otherwise, you could end up in a retrace, and we don't like that. We just like price to go straight down because, like I said, crypto is very volatile. You see this big spike, you don't want to be in and sit through all of that, especially if you're adding in. This right here, I promise somebody got their account blown on this pullback. So take the straight drop to the range bottom. That's going to be your safest bet. Once price gets outside the range, but you can see volatility increase. And as you can see, it just bounced off the weekly open price and then just came all the way back up. You don't want to be in the market when that happens. So that's a little short crypto weekend review. I appreciate you guys watching. Remember, candle range theory, same pattern over and over. But like I said, I appreciate you watching and have a great rest of your day. Take care.